In the dynamic world of Forex trading, understanding chart patterns can be a game changer for those seeking substantial profits. Chart patterns are like roadmaps that can guide traders in predicting future price movements. Let's delve into some simple ways to read chart patterns and potentially unlock huge profits. Firstly, it's essential to grasp the basics. Charts represent the historical price movements of a currency pair, and patterns emerge as traders repeatedly respond to similar situations. Two primary types of chart patterns are continuation patterns and reversal patterns. Continuation patterns suggest that the existing trend will continue, while reversal patterns indicate a potential change in direction. One common and easy to spot chart pattern is the head and shoulders. Imagine the chart forming the shape of a person's head and shoulders. When this pattern appears, it often signals a reversal in the market trend. A head and shoulders pattern consists of three peaks. A higher peak between two lower peaks, shoulders. If the price breaks below the neckline, connecting the lows of the shoulders, it may be a signal to sell. Another powerful pattern is the double top or double bottom. In a double top, the price reaches a high, retraces, and then reaches a similar high again before declining. Conversely, a double bottom occurs when the price drops, bounces up, and then drops again before rising. Recognizing these patterns can help traders anticipate potential trend changes and make profitable decisions. Support and resistance levels are crucial aspects of chart pattern analysis. Support is like a floor where the price tends to bounce back, while resistance is like a ceiling where the price often faces obstacles. Identifying these levels on a chart can aid in predicting where price reversals might occur, offering valuable entry and exit points for trades. Additionally, mastering candlestick patterns enhances your ability to interpret chart movements. Candlesticks provide information about price action and can signal potential reversals or continuations. For instance, a doji candlestick, with its small body and long wicks, suggests indecision in the market and could precede a reversal. Remember, learning to read chart patterns is a fundamental skill for anyone venturing into Forex trading. While no strategy guarantees success, understanding these patterns can significantly improve your odds of making informed decisions and maximizing profits. Start by familiarizing yourself with basic patterns like head and shoulders, double tops, and double bottoms. Combine this knowledge with support and resistance levels, and you'll be better equipped to navigate the intricate world of Forex trading with the potential for substantial gains.